Digital Realty Trust stock, ticker symbol DLR. It has been a while since my last video on DLR stock, so here we go. DLR stock is up 2% year to date, underperforming the overall market. And on the 15th of February, DLR presented earnings with a miss on FFO and revenue. Most people love DLR stock because of the dividends, and I understand why with dividend yield at 3.5%. However, if we look at the total returns including dividends in the past 5 years, we see that DLR only returned 39%, while the S&P 500 is at roughly 100%. And with the stock going down and up recently, and earnings just released, it is the perfect time to do an analysis. And I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So, what does DLR do? Digital Realty Trust is a real estate investment trust which is engaged in the business of owning, acquiring, developing and operating data centers. DLR has more than 5,000 customers and their portfolio consists of 300 data centers and 50 metros. Net income was reported at $0.08 per share, up from minus 2 cents in 2022. And to be honest, this doesn't look that great in general. FFO was reported at 1.53 compared to 1.45 in 2022. This is one of the most important numbers with REITs, and to me this looks pretty decent. Core FFO, however, doesn't look that great. NOI growth was reported at 9.9%, which looks really good to me. Revenue was reported at 1.4 billion, 11% increase year over year, but a 2% decrease versus the previous quarter. EBITDA increased 2% versus the previous quarter and 9% year over year. This looks pretty decent to me. In here we see that bookings are kinda flat in the past couple of years. You want this number to increase, so definitely keep an eye on this number. Roughly 50% of the revenue is coming from the States, while 25% of the revenue is coming from Europe. To me, this looks pretty good. The net debt to EBITDA is sitting at 5.8, which is looking really good to me. I prefer a range of 5.5 to 6.5 here. For the full year of 2024, it is expected that revenue will be in a range of 5.5 to 5.6 billion, only a small increase versus 2023. EBITDA is expected to increase also a tiny bit. And the occupancy rate is at only 81.7% in 2023, which is a really low number in my opinion. In 2024 they expect an increase of 100 to 200 bps. NOI growth isn't looking that exciting, and the FFO is also expected to only grow a little bit. And now that we know more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analysis every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. DLR is a 42 billion market cap company. PE ratio is not a fair metric to use with REITs, so I'll be using the price to FFO instead. Right now it is sitting at 23.5, indicating they might be at a premium price right now. Later in this video I will show you my 3 price targets for DLR stock, so make sure to watch until the end, because price to FFO is only telling a small part of the full story here. Revenue is at 5.5 billion, and in this graph we see that revenue went up really nice and steady in the past decade. To me, this looks really good for a REIT. We see that margins are going down in the long run. To me, this doesn't look any good and is definitely something to keep your eye on. EPS is following the margin. I'm not worried looking at this number. Analysis expect that in the coming years the EPS will heavily increase to $3.7. We see growth rates going up and down a lot. For the revenue growth, it is looking pretty interesting with 6% growth per year on average, which feels like a decent number. Return on assets is sitting at 2%, which is looking like a low number. Return on equity is looking low as well, and the most important number, return on invested capital, is sitting at 1.28%. Again, a low number. To me, this isn't looking really exciting, and I was hoping to see a higher number here. The 5-year average doesn't look any good either. Current ratio is at 1.14, which is looking really good for a REIT. Nothing really special to mention here. Another interesting thing is the debt. DLR has 19 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. DLR has 1.6 billion in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up quite steady over the past decade. To me, this looks really good. Shares outstanding are increasing, which is very common for a REIT, since they increase shares to raise capital. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 3.5%, which is a great number. Annual payout is at $4.88 and payout ratio is at 75%, which is the average for REITs. The growth numbers aren't really in line with the truth, so I think Seeking Alpha isn't really fully updated here. In here we see the dividends paid since 2012. They increased the dividends at a decent pace. In the long run, this really adds up. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course, this is an estimation that can be highly impacted by results, but it gives you a rough indication. It is expected to increase steadily from here. And overall, these dividends look really interesting to me, but how about the historical returns? I decided to compare DLR stock with the overall market, in this case the S&P 500. Next to that I added EQIX. On the 5-year chart we see that DLR massively underperformed the S&P 500. In total, DLR stock returned roughly 39%, while the S&P 500 returned roughly 100%. And keep in mind, this is including dividends. EQIX did a great job with 93% return, but still underperformed the S&P 500. On the 1-year chart, it looks really interesting, with 56% return for DLR, beating both the S&P 500 and EQIX with a decent amount. On the 6-month chart, it is again the S&P 500 that is the winner here, but this time both DLR and EQIX were at least somewhat close. On the 1-month chart, it is again the same story, with the S&P 500 being the big winner. So bottom line, DLR underperformed the S&P 500 long term and short term. So could this be the perfect time to buy DLR stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth, I'm filling in 8, 10 and 12%. Based on historical performance, their own outlook, but also because of the analysis. For the profit margin, I'm filling in 16, 17 and 18%. And for the free cash flow margin, I'm putting in 28, 30 and 32%. For the PE ratio, I'm putting in 20, and for the price to free cash flow, I'm putting in 18, 19 and 20. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now, DLR stock is around $138. I hit analyze, and we see a lot of red numbers. And since this is a REIT, I'm only focusing on the discounted cash flow value. We have a low price target of $93, we have a mid price target of $120, and we have a high price target of $154. To me, the mid price target is the most justified here, indicating the stock is overvalued. Which price target do you think is the most justified here? Let me know in the comments down below. My final conclusion on DLR is that most fundamentals look pretty good. However, I do worry a bit about margins. And keep in mind that valuation is heavily relying on DLR to grow in high amounts every year. From a dividend point of view, things look really good. It is not the highest yield for a REIT, but 3.5% is still a great number. It is also looking really safe to me, and growth is also looking really good. From a value point of view, things look not that bad, to be honest. Yes, they are overvalued, but if the stock price continues to fall down while the business improves, we will see the buying zone maybe very soon. For now, I'm skipping this stock, but I keep an eye on them, since their focus always interested me a lot. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.